Well, for more on what that impending House vote may mean for the U.S. and China, I want to bring in Nick Lardy. He's the senior fellow at the Peterson Institute for International Economics, knows a lot about China. He's also the author of the book, The Future of China's Exchange Rate Policy. Very apt, of course, for this discussion. Nick, thank you so much for joining us. And, you know, we're all watching, of course, this vote. What do you think the outcome is going to be?
Well, I think it'll be fairly strongly in favor of the amended legislation that the House Ways and Means Committee passed last Friday. I think it'll be a very large majority.
Okay, but it'll die in the Senate?
Well, certainly I think it's almost impossible for the Senate to take it up before they go into recess before the election. Senator Schumer has said he'd like to have it voted on in the Senate in the so-called lame duck session. But they've got a very busy session when they come back, trying to deal with a tax issue and a number of other things. So I think it's far from certain that the Senate will actually take it up.
Okay, and even if they don't, though, it's obviously going to send a strong signal to the Chinese. What do you think the repercussions are going to be?
I think we'll get a very strong verbal repercussion. The Chinese will push back very strongly, I would expect. But I'd be surprised if they do very much that's concrete based just on the action in the House. They have a very good understanding of the domestic politics in the U.S. They will be very well informed on the prospects for the Senate actually taking action.
Right.
So I think we certainly could be in a retaliation situation if this legislation were to pass both houses and were to be signed by the president.
Right, unless the pen goes to paper in the White House.
Right, exactly.
Then, you know, at this point, it's still just a lot of rhetoric. But Nick, let me just read for you. You know, Stephen Roach, the Morgan Stanley chairman in Asia, wrote an op-ed. He's been very critical of what has happened here in the U.S. against China. But let me just read you one thing he said in this op-ed, which is essentially saying that, look, if there was action taken against China, quote, it would only backfire. China could very well retaliate against American exporters and buy goods from elsewhere. It's not dependent on the United States, or it could start to limit its purchase of U.S. Treasury securities. What is your reaction to that? I mean, you know, I know we're just talking about rhetoric so far, but are the Chinese perhaps prepared to even do that at this point?
Well, I certainly think they might if this bill or something similar became law. Short of that, I think the kind of retaliation that he's talking about in that piece in the New York Times this morning is very unlikely to happen. But it's good to point it out because it's a risky road. You start going down this risky road and use an unprecedented approach to dealing with this issue. You may find yourselves in, we may find ourselves in hot water with the Chinese responding in ways that will make it very difficult for us.
But Nick, isn't it possible that the Chinese right now are thinking that no matter what, we want to diversify ourselves out of U.S. Treasuries because of what is going on here?
Well, of course, in theory, they'd like to, but in practice, their options for doing that are extremely limited. There's no other market that's as big and liquid that has the safety of U.S. Treasuries. So I think, you know, at the margin, they're buying a little bit more of Japanese yen bonds and Korean bonds and so forth, but that's a very minor thing. Okay, Nick, we'll leave it there, but good to talk with you to get your perspective. That is Nick Lardy from the Peterson Institute.